Hi guys, so in this video we're going to be looking at trend line usage. How do you use your trend line? As a trader, if we want to stay profitable in the market, we know that we must know how to make use of our trend line very well. So how do we make use of our trend line? One thing is very important. Your trend line is very resourceful to all trader. If a trade is on an uptrend, just like you can see here, this trade came into this trend, pull back again, came into the trend, pull back again, came into, didn't touch here, but still pull back, came again. Anytime the trade comes to the trend line, is a good place to always place your buy trade on an uptrend when a trade is moving to the upside. Likewise applicable on the downtrend too. Just make sure that you are placing it above it on a downtrend, below it on an uptrend. So above it now, we can see that anytime trade comes to trend line, there's a pullback, comes to trend line, there's a pullback. Trade is not touched, but anytime it comes again, you see that there's a pullback. I would have said I should quickly show us something peculiar whenever a trade did not touch a trend line before it comes out. So most times I've noticed something, and every time cause pullback, anytime trade struggle to touch the trend line and come later to touch, there's possibility that there is a higher chance of the trend line being broken on the moving forward. But that's more strategy, and so I'm not going to be buttressing more on that. You can see that applicable again here, but I'm just here to tell you on trend line usage, so we can talk a little on that. You can see here, likewise, trader has been respecting it here, it could not touch, but the next time it come, it's this region always giving signals. Anytime you see stuff like this, a signal that the trend line could possibly be broken anytime. But let's leave that aside. That's not why we are here. So how are we going to make use of trend line? If a trade is on an uptrend, all you want to do is connect the obvious trend. You can see this trend now. Trade is on an uptrend. You have to make sure anytime trade comes to the trend line, there's a pullback, trend line pullback. So how do we make use of trend line? Something very peculiar about trend line usage. It's very effective when a trade is moving like in an uptrend. When a trade is on an uptrend, we'll be talking of trade moving from a low. Trade moves from a low. You can see here it moves from this low. This is a low, and then moves to a high. You can see moves to a high. Trade moves further to a high. So in this kind of trade scenario, you'll be looking to buy anytime trade pull back into what we call the higher low. Higher low. You can see represented here, higher low or higher low. This is a higher low. That's where you look to place your buy entry. You don't place your buy entry whenever a trade is below your low. You must make sure whenever the trade is on an uptrend, you look for your opportunity at the higher, means the trade has possibility to buy more. Whenever a trade is pulling back to form an equal low, there's possibility like this region now. This is like a equal high, but let's leave that aside. We're looking at equal low. There's possibility that trade could be planning to sell off anytime soon. So, but it's another way to place your buy. You can also come and buy because trade had been here before. Anytime you come back, can pull back. But we're talking about trend line usage. So trend line does not mostly work with equal levels. It's often work whenever a trade starts from a low on an uptrend, then it moves to a higher high. Whenever you see that a trade has printed a higher high, then you'll be looking for opportunity to see if the trade will pull back at a region. Like here, we could see that the trade came to pull back. The next time, immediately, most time when I'm trading, I see a sudden pullback here, I bring out my trader possibly, but when this trade started, all these have not happened. Like when this trade started, let's say all this region has not printed itself as at then. So what do I want to do? The trade was still here. The moment I see a sudden pullback here, I bring out the trend line immediately and connect it to where it pulled back and see if the next time trade comes into the region, there's a pullback, or possibly I go to lower time frame to see the best place way to enter it. But most times whenever a trade comes back to the trend, and there's always a pullback, so it's a stronger region to place your buy. You don't think twice when we'll get a trade in those regions. So furthermore, we can also see so when it moves, we move further to form another higher high. trade will move further to form another high. You can see this is an higher high from this previous higher low. It form an higher high here. Then again, the trade go further again to form another higher high here. So you could see that the trade did not. This is a lower high. Also, is a lower in as much the low does not take out the previous lower high. It's a lower high. You can see it was close to the trend line, but never fulfill that level, but it eventually came to fulfill it here. So most times when you see a trade at the end, the trade is on an uptrend. Whenever you see it at a higher low, that's more opportunity to buy. So you use your trend line whenever you see that trade retrace back to a higher low to find your buy position. Also applicable to a sell. If we're looking at the sell scenario of this same setup, like see, we can see that this trade started selling here. First, if it's a sell now, this was a higher high. For a sell now, we'll be taking this as a high. We're taking this as a high. We're taking this as a high. Let me give it a different color. Let's say we use color gray now. What color can we use? Okay, as a high. So on the sell now, the trade would, whenever a trade pull out of the trend line, you can see that this trade pulled out of a trend line. Best way to draw a trend line is always cloning it, not drawing a new trend line. This was the first place it's respected. You can see it pull out from the high, come here to form the first low. Now when the trade starts selling, where you call the previous your higher low will become your first low. Become your first low. Become your first low. So also applicable to when we were buying initially, whenever a trade breaks out, this is the first, it forms the first high. It formed the first high. So that's at this place, this was meant to be high. Okay, then it forms a lower high and continue again to the uptrend like that till it gets to where it started correcting. So likewise, applicable here, when the trade starts selling, it must form a first low like we have here. It formed a first low, form a first low. So how do we know that this trade we are in for a sell? Remember, trade got rejected at this region. So what you do is you bring out your trend line, connect the region. Whenever you see trade back in that level, you look for opportunity to sell now. So now what we'll be doing now is this low to high. Now we'll be looking at whenever a trade retraces back to this level, it will be forming a lower high. It will be forming a lower high this time around instead of forming a higher low and higher high. So this region becomes a lower high. Lower high region comes the lower high region, and then we move further. Whenever the trade continue again, pull down to the downside, you can see it eventually broke to form a new level. So we could decide to stretch our trend line. This is valid. Okay, so then the trade forms a new lower low. Call this region the lower low region. Okay, lower low region. This is lower low region. So and trade, so when you want to sell, you look for whatever trade retrace to a lower high. Whenever you pull back to the trend line, you look for opportunities. You can see trade came into the trend line here, look for opportunity to sell it off. So here trade didn't come to the trend line, but it was still a lower high in as much as it did not break the previous high. And we can see trade went further, then form another lower low here. Why are we calling them lower low, lower high? Like it's a lower low in as much that the sell-off validated the previous sell-off, probably sold below the previous. If it didn't sell below, then we call it a equal low. Like let me find a scenario. For instance, like when this trade was selling, it pulled back into this place, pulled to the upside. Okay, this region, we can call this region even an equal high region. There's a high here, there's another high here. We can call it the equal high region. I can see that when the sale validated it, pulled back into this, form a lower low. and pull back to form a lower high, and we see it again sell off to form a lower low, and form eventually broke out of this region. The moment anytime you see your trend line broken, you forget about the sell. If you're on a sell entry, you see trend line broken, those regions you call your lower high, it become invalid. So you just wait for a pullback into that region. Just wait for a pullback into that region in which the trade was broken. Anytime trade gets there, it's a nice avenue for you to look for more potential buy, because this trade is done selling for the main time. So likewise applicable to the buy trend. Like when you can see that this trade was on an uptrend, pullback, went up, pullback, went up. The moment it got validated here, we can see trade broke out of this region here. So we look for opportunity for the market to pull back to that region for us to sell off. That's why we can see a sudden sell off here. Traders are looking for where it was broken. So this place too was broken here. So we'll be looking for the same scenario to happen in future times. Trade to sell off to this region, then we look for opportunities to buy more. But worst case scenario, sometimes the market could be very volatile. You can decide to say it wants to sell further to the trend line, but anytime you see it respect that trend line, pull back, it's an opportunity to look for more potential buy. I don't believe with this little explanation, you should have more knowledge about how to use your trend line. You don't just use your trend line because you just see trade jump into the trend line and place your buy. Like for instance, I was talking about it quite easy here now, trade come into the trend line and pull back. And here it came a pullback again and pulled, but here it got broken. So you don't just because trend line buy, no, you have to wait for confirmation, and this can mostly be printed on your lower time frame. Like if you come, for instance, this trade, if we come to like 4 hours, we can see clearly. Where this trade printed the buy entry. Okay, it came here into it, came pull back into it, confirmation to buy, we move to the upside. Here it got broken, first signal. The second time you come into it, you look for opportunity to sell it to the downside. So I want to believe with this, I've explained, you have more knowledge about how to make use of your trend line. Your trend line is valid when you understand how your higher high, your low works, your high works, your higher high, your higher low, your lower low, your lower high, your equal high and equal lows. So like for instance, now we can see this kind of trade. Now if you can see this trade, when this trade pull from this trend line to the upside, you could see that if you even connect on the trend line, you can see that this region is a valid market has been buying from there in terms. But so meaning that whenever you see a pullback that has this is what I call golden entry. This kind of region are always solid, strong. Anytime you see trend line, the support level or resistance level meeting each other, there's strong decision making procedure region. You can see trade pull into it and needed to respect because there was a pullback in terms. I can see the previous time here now there was also this is also a strong psychological level. So if you are trading on a lower time frame, you see trade at this region, look for more potential buy. Also applicable to sell. Also if you can bring our trend line and see where trade has been rejecting time past, let's see this region, you can see that trade has been rejecting this region in time past. Anytime trade gets to the region, it would respect what has been happening, particularly when you see it together with a trend line. You can see it came into that region because the trend line and the resistance level is meeting, it has to respect the other. Likewise applicable anytime you see them clash with each other, they will always respect each other. You can see was a pull, particularly you can also see they respected each other here. We were on an uptrend, so you have to break to the upside. So when it was on a downside trend, anytime you see them, they met each other here. They met each other, they decide to pull back to there. So because I'm just talking on trend, I would have go more deeper into some strategies that you can also apply to making use of this. But I want to believe with this, you have more in-depth knowledge on how you should be using your trend line. You don't use it whenever a trade retrace back to it for a buy. If it's an uptrend and if it's a sell, when it retrace back into it on the upside for a sell. And whenever you see them at this region, you see your trend line and your trend line and your support or resistance region clashing, meeting each other. They are strong decision with preaching. Like here now, This trade sold here because they met each other. Trend line, resistance met trend line, so you have to respect it. Then it pulled below. Resistance met support met trend line. It needs to pull it back to the upside. And we could see further here, those decision making regions are always clashing with the resistance of trend line. So I believe with this little explanation, you have more knowledge on how you should be using your trend line moving forward. Wish you all the best. See you in the next.